Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HURON Consulting Group INC quarterly report. HURON Consulting Group Inc. provides a wide range of businesses and services across three segments: healthcare, education, and commercial. Some of the key services offered by the company include financial and operational performance improvement, consulting digital offerings, including technology and analytic-related services, organizational transformation, revenue cycle managed services, and outsourcing financial and capital advisory, consulting strategy and innovation consulting technology, managed services, research-focused consulting managed services, global philanthropy consulting services. The company also offers a software suite called HURON Research, which facilitates research, administration, service delivery, and compliance. Additionally, the company provides digital services, software products, and commercial consulting services. HURON Consulting Group Inc.'s stock price surge, a year of unprecedented growth in a remarkable display of financial prowess. HURON Consulting Group Inc. HURN has witnessed its stock price soar by an impressive 46.03% over the past year. This significant increase can be attributed to a combination of factors that have collectively contributed to the company's sustained growth. Strong earnings reports and upward revisions in guidance have been hallmarks of HURON's performance, with each quarter showcasing remarkable financial results. The company's strategic acquisitions, including AXIA Consulting, Eclipse Insights, Treliant, and Wilson Perumal, have also played a crucial role in driving revenue growth. Furthermore, robust demand across its operating segments, particularly in healthcare, education, and commercial, has been a significant driver of increased revenue. Favorable analyst sentiment has also been a key factor, with several firms maintaining or upgrading their ratings and increasing price targets for HURN. The company's commitment to shareholder value through share repurchases has further boosted investor confidence. As a result, HURON's stock price continues to rise, reflecting the market's growing optimism about its future performance. The primary drivers of revenue growth or decline can be summarized into several key points. Revenue growth is primarily driven by acquisitions, increased demand for consulting and managed services, digital capabilities, and a strong increase in the number of revenue-generating professionals. In contrast, revenue decline is mainly attributed to decreased demand for financial advisory solutions within the commercial segment and the divestiture of Studer Education practice. The healthcare and education segments have experienced growth due to strengthened demand for various services, while the commercial segment has seen growth in technology and analytics services. Additionally, revenue growth has outpaced increases in direct costs and selling, general and administrative expenses, resulting in a decrease in these expenses as a percentage of revenues before reimbursable expenses. Net income and profit margins. Overview. The net income of the company experienced a mixed trend in Q3 2025 compared to previous periods. While it increased by $3,271 to $30,420, the year-to-date (YTD) net income decreased by $8,251,000 or 9.9% from $82,637,000 to $74,386,000. On a comparative basis with Q3 and YTD 2024, the net income declined by -11.6% and -9.8%, respectively. Profit margins also showed varying trends across different periods. The operating margin increased to 11.4% in Q3 2025 from 11.2%, but decreased to 10.1% for YTD 2025 compared to 11%. Similarly, the net income margin declined by -9.7% and -9.8% for Q3 and YTD 2025, respectively. However, segment-wise profit margins presented a more positive picture. The healthcare and education segments witnessed an increase in their profit margins, with healthcare rising to 30.3% from 26.9% in Q3 2025, and education increasing to 25.2% from 23.7%. In contrast, the commercial segment's profit margin decreased to 16% from 24.1% in Q3 2025. The fluctuations in net income and profit margins can be attributed to various factors, including changes in market conditions, operational efficiency, and segment performance. The company is indeed generating positive operating cash flow. This is evident from the financial summary and supported by specific data points on pages 33 and 51 of the report. The 3 months ended September 30, 2025, saw an operating cash flow of $123,181, which is a clear indication of the company's ability to generate cash from its core operations. Furthermore, the net cash provided by operating activities for 2025 was a substantial $66,987,000, reinforcing the notion that the company is producing positive operating cash flow. The company's debt level has seen a significant increase over the past year, from $357.7 million in December 2024 to $611 million in September 2025. The debt has risen by approximately $253.3 million. Furthermore, long-term debt has also increased from $342,857 to $589,591 during this period. In addition to the increase in debt level, interest expenses have also seen a notable rise. The company's interest expenses have increased by $6 million to $25.9 million in the first 9 months of 2025. Moreover, the weighted average interest rate has risen from 4.7% in December 2024 to 5.6% in September 2025. These changes indicate a significant shift in the company's financial situation, with both debt level and interest expenses experiencing substantial increases over the past year. The company's financial performance was mixed across different segments and regions. Notably, healthcare and commercial sectors excelled with significant revenue growths of 20% and 27%, respectively. In contrast, the education sector lagged behind, achieving a relatively modest increase of only 7%. This disparity in performance highlights areas where the company has been successful and those that require improvement. The management of the company is optimistic about its future prospects, with a clear strategy to sustain accelerated growth across healthcare and education. Key areas of focus include expanding offerings, growing commercial industries, advancing global digital capabilities, achieving margin expansion, and maintaining a strong balance sheet and cash flows. These efforts aim to drive long-term success while mitigating market risks through strategic hedging initiatives. The company has made several strategic moves through acquisitions and divestitures. Notably, the company has engaged in business acquisitions without specifying names on page 24, as well as strategic tuck-in acquisitions detailed on page 34. Additionally, a significant acquisition was made with W&P&C on September 1, 2025, as mentioned on page 56. Conversely, there have been no divestitures reported in this summary. That concludes the financial summary for Huron Consulting Group Inc. Feel free to comment below, and I will be happy to answer them when possible.